Hi everyone, my name is Nick from the Ardcon group, based in Melbourne, Australia. In this video, I would like to help you learn about using the equity you have in your current property to purchase an investment property. You own your own home and you're now looking to buy an investment property, but you don't think you have the money. Don't worry, most people don't have the cash. This is where the benefits of equity come in. So what is equity and why access it? Equity is the proportion of your property that you actually own. It is the current value of your home less the size of your mortgage. Allow me to explain this graphically. In the diagram on your screen, we have a house that has a current value of $500,000. If you had a mortgage of $300,000, then your equity in the property is $200,000. I would like to point out that I said the current value of your home and not the purchase price of your home. This is because the value of your property may have grown since you purchased it. Therefore, equity includes this growth. If you are looking to invest using the equity in your property, then you need to understand the difference between your equity and your usable equity. If you are looking to get a loan from a lender to borrow against the current equity of your home, then they will look at how much usable equity you have. They will, however, also look at a number of other factors such as your family situation, your age, and your annual income. Considering usable equity is so important, let's talk about what it is and how it works. Generally speaking, the bank will lend you up to 80% of the value of your property, minus what you still owe on your mortgage. The difference between these two figures is your usable equity. Let's look at this graphically and use the same $500,000 home to keep things simple. So your property is worth $500,000 and your mortgage is $300,000. If the banks are willing to loan you up to 80% of the property value minus your mortgage, then your usable equity is $100,000. Let me show you how the figure came to be. You have the value of your property, which is $500,000. So 80% of the value is $400,000. Then you subtract your existing mortgage on your property, which is $300,000. This leaves us with a usable equity of $100,000. As a general rule, you should only buy an investment property that has a purchase price no higher than 4 times your usable equity. With our example, this would mean you could look to buy an investment property with a purchase price of $400,000. Let me explain this to you. Remembering that the bank is willing to lend you 80% of the property's value, and when we consider that we can purchase a $400,000 property, 80% equates to $320,000. The remaining $80,000, which would be the 20% deposit in this case, comes from the usable equity in your current property. You're probably thinking about what happens to the remaining $20,000 of your usable equity. Well, as part of purchasing a new property, there will be a number of different charges such as legal fees and stamp duty, and in the end, they could equate to roughly $20,000. I hope that made sense to you. However, if you are still a bit confused, then please rewind the video and run through it again. Even pick up a pen and run through some scenarios yourself using the example in the video as a template. Try calculating the usable equity in your home to see what the potential purchase price for an investment property would be for you. So throughout this video, I've spoken about how the banks are willing to lend up to 80% of the property value. It is actually possible to lend more than that. However, you will need to take out lender's mortgage insurance, or LMI, which comes at an additional cost, so we try and avoid this where possible. Lender's mortgage insurance only covers the bank in case you are unable to meet your repayment obligations. You need to know that this insurance does not relieve you of your repayment obligations. It only covers the bank. Here at Ardcon, we recommend using a professional to help you find the loan that best suits your needs. If you need help with finance or would like to know anything more about the investment process, please don't hesitate to get in touch with us for more information using the contact details on your screen. Thank you for listening, and I hope this video was helpful in understanding how equity can be used to purchase an investment property. To learn more about investing in property, we have other videos in our educational series that can give you the knowledge to confidently enter the property market.